Welcome to our weekly Forex forecast, and this is for trading from the week of April 20th to the 24th. And just before we get started here, just a quick disclaimer here. This is for educational purposes only. Trading is a risky business, so please be careful with your money, especially right now with the market being crazy the way it is right now. And so let's get started. As usual, we'll start off by taking a look at our calendar here. And as we can see, first here, we do have monetary policy meeting minutes here from Australia on Monday. And we also have RBA Governor Lau speaking. So with the central banks right now, the interest rates are fairly low. So we're not really looking for any interest rate cuts. The question will be around the commentary. What are they foreseeing in terms of the growth, or I should say the decline this year or coming year into 2020 and 2021. So that will basically be what we are looking for. So the commentary will be important here. And then actually we also have trade balance numbers here from Japan, as well as trade balance numbers here from Euro. So these numbers will be important. As we can see, we are we're expecting a decline here in the trade with the countries being in various forms of lockdowns. We are likely to see a decline here, and if the decline is worse than what's expected, we are likely to see a decline in Japanese yen. So last week, Japanese yen did fairly well, but should these numbers come in below expectations, we are likely to see Japanese yen drop, which means the yen crosses could go up based on that. And then on Tuesday here, we have employment numbers here from UK. So we have seen in the US, there have been a lot of unemployment applications. So here we'll see what we have in terms of applications here from UK. So there should be a lot more than 17,000 here, because just like US, we are seeing the economy in UK is not doing as well. So there should be a lot of layoffs and stuff. So depending on how much bigger the number is here, if it's considerably bigger, then we could see a decline in British pound as a result of that. And of course, not really expecting an increase in the average earnings. It should not really be going up. But again, if the number is substantially different, that will be negative. On the other hand, though, if the numbers are higher than what's expected, that will be good for British pound. So any kind of positive news these days is impacting the market in a more positive way than the negative news is at this point. And then let's take a look here. We also have the economic sentiment numbers here from the Eurozone here. Again, expecting a negative number. It's just right now we're just looking at how much negative it will be. If it's less negative than this, then it will be better for Euro. Otherwise, we are looking for, we could see Euro decline as a result. CPI here. CPI numbers are generally very important. This is a key indicator that the central banks will watch. Again, as we can see, there is a decline expected here. But similarly to what I said with the average earnings and claimant count numbers before, if this is worse than what's expected, then we are likely to see a decline in British pound. The inflation rate has been fairly good from UK. So should that change, that would be seen as a big negative for British pound, or should it decline more than what's expected? And then we have Canadian monthly CPI as well as yearly CPI numbers here. Same thing as I said before for British pound as well. Canadian dollar has been taking a hit because of oil prices have been dropping. So if this number is again lower than or substantially lower than this here, we're likely to see a decline. We could see a further decline in Canadian dollar here. And then we have PMI numbers here. PMI numbers are very important, and these are basically precursors to our retail sales and GDP numbers. So I would expect them to come in below, even below what the expectations are here, because around the world, most of the economies are in some form of a lockdown. So these numbers are likely to be lower. So I don't suppose that a lot of people are buying stuff. So the purchase managers would not be buying stuff. So keep an eye on these. But on the flip side, though, any kind of positive numbers here or numbers that are above expectations are likely to cause a positive move in euro or British pound here. And then we have employment claims number here. So last time the number here was over 5 million. Now, if the number continues at that rate, now that will be bad for US dollar. Around that though, we have seen last week that President Trump talked about opening up the economy and doing this rolling open of the economy. And that was positive for the markets. We saw that the equity markets jumped up as a result of that. Now, if that is successful, now everybody basically will be waiting to see the results out of that. If it's successful and we don't see a huge impact in terms of growth in the number of cases, then that will be good. And we could see equity markets go up further. However, if the negative news starts to come out, then that will have a negative impact on the markets, and we're likely to see a drop. So keep an eye on equity markets in the next couple of weeks here, because as we get these numbers, we are likely to see volatility in the market. Okay, so coming up on, what do we have? And then into Friday here, more retail sales numbers here, as well as business climate numbers. Again, I would expect it to be below this number, but again, depending on how much below it comes out to be. All right, so that's it in terms of our data here. So let's go on to our charts. Okay, so as usual here, we are looking at, we'll start with euro dollar here. So we saw that euro went into this resistance level, and now, or this week, we saw, last week I should say, we saw a drop here. So this one still has bearishness in it, even though we did see a move off of the support level here, there is still bearishness in this. So I will look for a further decline here. And the first target here is 1.0770. This is an important support resistance level, and should it manage to go through, then we're looking at 1.0640. So this week, like I said, expect a lot of movement. I'm expecting volatility in the market, because as the numbers come out, or virus numbers come out of the US. So right now, US is leading in terms of the number of cases. And if that number grows, then we are likely to see a negative impact. But if the numbers actually decline, even with the opening up of a few states there, if the numbers either maintain or they actually decline, that will be positive. So if equity markets go up, we're likely to see these dollar crosses go up as well. So that would be a key thing to keep in mind. But other than that, just based on the technicals here, this is the type of move I would look for. So basically looking for price to retest the support level at 1.0770 and then potentially into 1.0640. So bias is bearish. All right, and pound dollar here. Pound had a big move to the upside here initially, and then as price got into this resistance level, this is a strong support resistance level coming all the way from there. We did see price move off of that level. So at this point, a bias is bearish here. Now we could see a pullback, so I would watch out for that. And potential level for pullback would be 1.256. 0 or 80 in that area, and then I will look for a decline. So the potential move that I'm looking for here would be something like this, bit of a pullback, and then a drop. So first target would be the base of last week's candle, which is 1.2400, and should it decline further, we have 1.220 there, and in between there, we do have this 1.23. So basically 1.24, 1.23, and 1.22. Those are the three levels to keep in mind here. So bearish bias here for pound dollar as well. Now, Australian dollar actually did fairly well last week. We did see a move up, and it did move off of the bottom, sorry, off of the top there, but it went down and then came back up. So this week's candle is a neutral candle. So this is an indecision candle. We have basically equal pins on both sides and small candle body. So at this point, with Australian dollar, if the equity markets go up, Australian and New Zealand dollar tend to go up with that. So keep that in mind. This one is neutral for now. And what I would keep in mind here would be, if price goes up, 0.66 is the target, and should it go down, we're looking at 0.6120. So I'm just going to leave those targets in place, and we'll just have to see which way the price breaks out. If it goes through the top here, through 0.6450, then I would look for a continuation move to the upside, and we could see price go up even further here. On the flip side though, let's say we start hearing negative news, then I would look for price to break through the bottom and basically look for a continuation move to the downside. So something like that. Right now, we are not clear, or it's not clear as to where it will go. So I'm just going to leave this like this and look for that breakout. So bias is neutral for Australian dollar. New Zealand dollar here, this one is a little bit more bearish than Australian dollar, but it's kind of in the same territory here. It did go into the resistance and then went into the support, but bounced off of the support level. So this one could also go up a little further. Right now, there is bearishness in it. What I'm looking for, New Zealand dollar, would be a retest of the high potentially into 0.16135 level. And if it holds below, I will look for it to come back towards the bottom of this range. For now though, my bias is neutral with this one as well, because I'm essentially just looking for a sideways move here if it holds below 0.6135. So bias for New Zealand dollar is also neutral here. Dollar CAD here, this one has, this one looks, let me just clear that. Okay, so this one, as we can see here, price went up and then it has come down. With this one here, we do see a big rejection here. So similar to the New Zealand dollar, what I'm looking for here is a potential retest lower into about there, and then a further move to the upside. Same thing here, if the equities start doing really well, equities start going up, then this one is likely to come down. So dollar CAD is likely to drop in the scenario that equities start going up. But for now here, we do see a large rejection from the top. So I am looking for a retest of the bottom here, or even a little bit higher into 0.3920 and then 0.3850. Now, should this break, then I'm looking for a further move to the downside. But just like New Zealand dollar, if the bottom holds here, chances are very high that we are going to go, we're going to see this move back towards 1.4180. So right now, this one is also neutral for me. But if it breaks through the bottom here, we have this big inefficient move here that can get filled. So we have a lot of room to the downside. Euro pound here, this one is still looking bearish. It did look like it may potentially turn, but not so much. Still looking quite bearish here. So bias is bearish with this one. First target is 0.8620. And then below that, we're looking at 0.85 8580. So bias is bearish for euro pound. Euro Swiss franc here, this one's finally starting to move to the downside. It finally broke through that support level. And next target for this one for Euro Swiss is 1.0480. So bearish bias. And then below that 1.0420. So bias is bearish for Euro Swiss franc. Pound Swiss franc here, this one seems to be coming into trouble now. We have seen this move to the upside, but now price is getting compressed here. So if you take a look at the 1 hour chart, we see that it's just kind of stuck here. It looks like it's moving higher. It is moving higher, but now it hasn't really shown a lot of move to the upside. So it's starting to get compressed. So even here in the daily, we can see it's not really moving much. So when that happens, generally we tend to see a reversal. So I would look for a reversal here. So bias will be neutral, but I would look for a rejection of the high and then looking for a move to the downside. So as long as price stays below 1.2150 here, I'm looking for a move to the downside. But I'm just going to say neutral here because should the equity market start going up, this is likely to go up as well. And if it goes through the resistance, then there is a lot of room to the upside for this one as well. But based on just the technicals right now, this is looking like a compressed move. And generally with the compressed moves, we see a move in the opposite direction of where it's going. So in this case, because it's been going up, so I'm looking for a drop here. But keep in mind the resistance level, if it goes through, chances are it will continue higher towards 1.2430. For now though, my base case scenario is to the downside. Dollar Swiss franc here, this one hasn't really done much. This one is completely neutral at this point. We have pins on both sides, equal pins and small candle body. This is a very neutral candle, indecision candle here. So with this one, what I'm looking for is a retest of the high. So if it holds below, then I will look for a move to the downside, and then basically something like this. So just looking for a sideways move for dollar Swiss franc. And the reason for this is Swiss franc was strong last week, as well as US dollar. So between the two of them, they're essentially equal right now. That's why the candle here is neutral. And if things continue the way they were last week, then I'm looking for essentially a sideways move here. But if they change, then we're likely to see one of them get ahead. For now, bias is neutral. Yen crosses. So let's take a look here. Pound yen here, we see that price went right into this resistance level. This is an important resistance level here, and it wasn't able to get through. Now, we do have a bearishness in this candle, so I am looking for a drop. First target here is 133.80. And if it holds above that level, then of course we can see a further move to the upside. So keep that in mind. And this is likely to happen if the equity markets go up. But if they don't, and we continue on with the technicals here, I would look for a decline. And once we see price go through 133.80 to the downside, next target is 132.60. So basically I'm looking for a decline here, but with caution, because if equity markets take off, then this is likely to take off as well, because when equity markets go up, yen actually declines, yen weakens, which means the yen crosses will go up. Same thing here with euro yen as well. We do have a nice bearish candle close here, but it's into strong support here. 3 times price hasn't been able to break this support, so just be cautious. So bias is bearish. However, as we can see for the last 2 weeks, or essentially last 3 weeks, price has been stuck in this range between 118.80 and 116.60. So at this point, bias is bearish, but with caution, because if price fails to break this 116.50 level, let's say, then we are likely to see it go back up towards 118.80. So bias is bearish, but with caution. If it manages to finally break through this support level, then next target would be 115.80 and then 115.20. So bearish bias for euro yen, but with caution. And dollar yen last week, we were looking for a drop. We got that. And now, as we can see, price is back into this support level. So this is where it had bounced off previously. So again, for this one as well, for last 4 weeks here, price has been stuck between 109.30 and 107 here. It's just gone back and forth for the last 4 weeks. And now we see a similar pin here to the downside. So with this one, what I will look for is a retest of the bottom here, and should it fail to go below this, we could see a further move to the downside. But right now, based on the technicals though, this is looking bearish. Just keep in mind the support level, and if it manages to get through, overall it is making lower highs. Now we just need to see a break of the support at 107. If it doesn't break, then I'm looking for a sideways move again, something similar to what we looked at previously. We could see a retest, and then price could go back into this range and basically just go sideways like that. Now, bias is bearish, so if we see a break, then I will look for a further move to the downside, and we could see price actually go through these levels, but it hasn't done that in quite some time. In several weeks, price has been stuck here. So this is a very important support level, so keep that in mind. But once it breaks, things tend to then flow. So then we'll look for a further move to the downside. Bearish bias though for dollar yen. Aussie yen here, this one actually has held its level here. It's stuck right now. It's sideways right now. We see pins on both sides and small candle body, indecision candle again. Australian dollar tends to move really well with the equity markets. If the equity markets go up, Australian dollar tends to go up as well. So in that case, we could see a further move to the upside here, and we could see it go all the way into 71.50. On the flip side though, what I'm looking for essentially is a retest of the high. If it holds below, then I'm looking for a further move to the downside. At this point, we just really need to wait and see. The biggest thing that will move the markets will be the virus cases that we see coming out of the US. So that essentially will be the driving force. So we heard that last week when President Trump announced that the markets, or at least not the markets, but they are going to start opening up the economy. Markets liked that, and we saw an upward move or upwards move as a result of that. There was also some news in regards to Gilead saying that, or somebody claiming that Gilead said Gilead has, they have done tests and that are having positive impact on the patients who have the virus. And then Gilead come back and basically refuted that and said that was just anecdotal. There was really, the studies are not complete yet, and they don't know if the drug will have an impact. But we saw when positive news came about the drug, we did see a positive impact on the equity markets, and the stock market jumped up as a result. So right now, stock market is very volatile right now, and news, any kind of positive news is likely to push it higher. So if we see that the virus numbers stay constant, even if they don't decline, if they just stay constant, that will be positive for the equity markets, because essentially with a lot more people moving around and numbers not increasing, that's a good sign, and expect the markets to go up in that case. In that case, we're likely to see this go up as well. But if the news is not so rosy, then I would just look for a retest of the high and potentially a drop. So right now, bias is neutral for Aussie yen. New Zealand yen here, this one is a little bit more bearish than we saw for Australian dollar here. This one, we see half and half. So there was a move to the downside, but there's also a rejection here. So this one is also neutral. What I'm looking for here would be same thing. New Zealand dollar is impacted similarly to Australian dollar. So I would look for a bit of a pullback here. And if it essentially holds below the resistance level, the top of the top of this range, then I'm just looking for price to basically come back into the bottom of this range. So as we can see with this one as well, price has been stuck in this range for quite some time. So I'm just looking for a move back towards the bottom of the range. But like I said, if the equity markets take off, this is likely to take off to the upside as well. For now, bias is neutral. I am looking for a sideways move for New Zealand yen. CAD yen, this one has been stuck in this range for quite some time as well. This candle is more bearish looking than New Zealand yen. So I'm looking for a drop towards 76 and potentially towards 75. So bearish bias here for CAD yen. All right, so let's move on. Let's move on to our commodities here. We'll start off with silver. Silver is looking bearish. We have a pin bar type of formation here, so I will look for a drop. Now, having said that, though, there is a big focus on equities this week and in the coming weeks here. When the equities, it's interesting, when the equities are moving up, gold and silver are moving up as well, which is not normal, but that's how the correlations are working right now. So right now, what I'm basically looking for just on the technicals, so if you leave the equity markets aside for a second, just based on the technicals, this is the move I would expect. Bias is bearish, and first target is, of course, the retest of 15.00, and then 14.65 and potentially into 14.20. So bias is bearish for our silver. Similarly here for gold as well. Gold jumped up quite a bit or it has gone up quite a bit in the previous weeks here. And now we see a large doji here. So looking for price to drop further here. Watch out for a pullback into 1700 and then a further drop. So bias is bearish here as well. And first target is 1650. And then we are looking at 1650, 1640, essentially all the way into 1600. So bias is bearish here for gold as well. Oil here, unfortunately, oil has not done very well in spite of the agreement between OPEC and Saudi Arabia. Oil is still dropping, and the reason for that is a drop in demand. As the different economies start to open up, which I think we are still a few weeks away, but as they start to open up, then we'll see oil go up. So in the meantime, with the demand being low, this is still bearish. From technical perspective, this is bearish as well. So this is the move I'm expecting, a bit of a pullback potentially into 27, and then further move to the downside. So target here is 21. So bearish bias for oil. Copper here, copper is still looking bullish here. We did see that price was sort of going sideways here on the daily, but it is still holding right into the resistance, which means we could see price move up further here. So bias is bullish, but as we can see, it's right into this strong resistance. If it doesn't break the resistance, then I will look for a move back down towards 2.23 or even potentially into, well, 2.22. But because it is looking very solid, but as we can see, this candle, green candle here, was very solid looking as well, but then we saw it drop and we could see a similar impact. So just keep it, just so that's the caution. But candle is looking bullish. So next target here is 2.36. And if it continues on higher, then we are into this support resistance level all the way into 2.41. So right now, basically bullish bias here. Just be cautious of the high of 2.30. If it gets stuck below, then we're likely to see a further move to the downside, because overall here bias is still to the downside. So this is basically the trend that we are seeing, and it could do one of these. That's why we have to be careful of this resistance level at 2.30. This is where price has reacted before, but once it manages to go through, we are basically going all the way up into 2.540. So right now, bias is bullish, just with caution here. Bitcoin here, I do not have the latest numbers, so please look that up for the weekend. But based on the Friday close here, this one's looking neutral. It's kind of been stuck in this range for last, as we can see, for a number of days here, for last several weeks, it's been going sideways here. The resistance level at 74.50 is still proving to be strong. So as long as it holds below 74.50, I will look for a drop. But should it go through, then it's likely to go all the way to fill this gap there. So the critical level to watch would be 74.50. As long as it's below 74.50, I'm looking for a drop. But once it crosses, then I am looking for it to go and fill the gap. So currently, the next target up would be 87.20, but right now this looks neutral. This looks like same thing that we saw with, I think it was pound Swiss franc, where it's just it hasn't really done much. It looks like it's been going up, but it hasn't. It's been stuck in that range. So we could see this one drop. So overall, right now I am neutral on this, and I'm going to leave these levels here and see what happens at 74.50. But overall, this looks like a compressed move and looks like this one could drop as long as it stays below 74.50. So neutral bias for Bitcoin. And now we move on to the equities. As we can see, the equities have done really well here. Big move to the upside. Last couple of weeks, we have seen price move higher. So last week, with President Trump announcing that basically the states can open up if they want to, there are 3 states that are opening up this week, so people are starting to go back to their normal life. So we'll see how things play out there. If the number of viruses, like I said, go up, this will be a negative thing, and this is going to have a negative impact on the markets. But right now, we have a very strong bullish candle close. Of course, it's right into our resistance level, so we do need to watch that. So bias right now is bullish, just based on technicals here. And once it gets through this resistance, next target is 29.86, so about 3,000 here. But the question will be, can it get through this resistance? Because if it doesn't get through 2,900, then we are essentially looking for a move back down here, right from this resistance level. So I would say bias is bullish for now, but with caution, we just have to keep an eye on the resistance level. So next target is 3,000, and then of course if it continues higher, we're looking at 30.25. So bullish bias for S&P for now. Nasdaq here, same thing over the last few weeks here. This has been going upwards here, and things have been quite on the bullish side here. But as we can see, this is also into strong resistance level, and this is where we need to keep an eye on this resistance level as well. If price holds below this level, I will look for a move back down here because this is a critical level to keep in mind. So we are looking at about 9,000 level. If it goes through, then there's, of course, we are back into that level where it started dropping from. And as we can see, it's almost right into going right into the highs here, which doesn't make sense, but markets can be rational longer than we can be solvent. So we have to keep that in mind and not try to go against the markets. So for now, bias is bullish with extreme caution though. If it holds below 9,000, I would be looking for a drop, but should it go through, first target then would be 91.70, and then we are looking at 93.30 right into the level where it bounced off of. But as we can see here, things are not quite as recovered as the markets may be showing us. So markets are going up based on all the money that is getting pumped into the markets, which won't always keep the markets up, which is likely to basically, it shows that there's no way with the current lockdowns and the current state of economies that the market should be back to where they started from. So that's why just keep in mind, which means they're volatile and we're likely to see a drop. But based on technicals here, this is looking bullish. And if the numbers out of US are positive, we are likely to see things go up. So bullish bias for Nasdaq here. Dow Jones, something similar here as well, but we're not quite close to the highs. So here we are seeing a bullish candle close. We are into resistance though, similar to others, but it is bullish. And next target here is 25,000. And if it goes through that, we're looking at 25,760. So bullish bias for Dow Jones as well. And then coming to DAX here, DAX is interesting here. We are still holding, or it's holding below this 10,800 level. But if all the markets in the US start to go up, this is likely to go up as well. And in that case, the next target would be 11,450. So right now, actually prior to that, we also have 11,000. So right now bias is bullish, but with caution again. And with this one here as well, we have to keep in mind our resistance level, because this area is important right now. As we can see, prices reacted here previously, and next target would be this one. This is also an important area. This is where we saw that initial drop from after this big one, and we are likely to see, or it's highly likely that price could turn from there. So for now, bias is bullish, just with caution. And similarly here, FTSE as well. It dropped and then it has gone back up. It still has some bearishness left in it, but what we could see is we could see a bit of a drop here, and then this one could go higher as well. All of these markets are so interrelated right now, and positive news tends to carry through all the equity markets. So this one also, so right now I will say, for this one I will say neutral, because this is, as long as it holds below 59.20, we could see this one drop. But once they start moving, I'm looking for this one to go higher into 62.20 potentially, and then depending on how gung-ho the markets are, we could even see move higher. For now though, neutral on FTSE. And last but not least, we have Japanese, our Nikkei here. With this one here, this one's has bullishness in it, but it's not as bullish as some of the other ones. It's still holding below this support resistance level at 19,850, or 19,000 actually, I'd say 900. So if it holds below here, this one is also kind of looking a little compressed here. If it doesn't go through, I will look for a potential move to the downside here. But if the others start moving, this one is likely to go higher as well. So right now, I'm neutral on this one as well, because the candle is not as strong, but there is bullishness, like I said. And if others start moving, then this is likely to go higher as well. And in that case, we're looking at 20,200 and then 20,850. So right now, neutral bias, and keep an eye for 19,900. All right, so that's it for today. And just wanted to remind everyone that if you are looking to learn how to trade currently because of everything that's going on, I am offering a really good price on the Learn to Trade Forex course. Of course, this one will only be available while we are going through this world crisis. Once all the economy is up and we're back to, everybody's back to work and stuff, this price will be gone. So this is just to support everyone through this crisis that we're going through right now. So instead of paying $497, which is the regular price for my course, you can get it for $197, 60% off essentially. And basically you would learn how to trade price action. And the coupon code that you want for this is "We Got This." And if you're looking to join the Turning Pro Challenge, the coupon code for that is Turn Pro. But overall, basically, you can get a discount on that. And this is just to support everyone as we get through this. Then after that, we are back to things being the way they are. So that's it for today. You guys have a wonderful trading week. And of course, I do the daily analysis. If you want to catch that, it will be on my YouTube channel. You can check it out there. So that's it for today. Have a wonderful trading week, and I'll see you again on Monday. Bye for now.